Hey guys, welcome back to today's Teachable Moment. Today is Friday, September 16th. It's about 9:25 in the morning. And guys, I want to tell you about a trade that we didn't take on wheat futures and why we didn't take it. So earlier this week, I found a rally-based rally here on wheat, and I've had this price point set up, and I got alerted earlier this morning around 4 or 5 in the morning that price was coming into this level. So you can see on a 4-hour chart, we have a higher highs in price and higher lows in price. But recently on this pullback is the first time that we've actually been able to get below 40. So that is the very first signal of a potential trend change, is on a larger time frame getting a close below 40, and that's exactly what happened as we approached into the level. So on a 1-hour chart, you can look at this, and this is the 4-hour is in the orange, if you will. But there's also a rally-based rally right here that if you wanted to be just a little bit of a smaller time frame trader, that fits as well. And I know I can't overlap this. I don't know how to send this to the back. But anyways, this blue area is this rally base, big move out. That's a fantastic level. However, here's the problem that I had. So I'm gonna get rid of this just to clean it up a little bit. But the other level was here. Come on. The other level was here, right? So we came into that this morning at 4 o'clock in the morning. This is when the alert went off. I saw that price was coming into the level, and I chose not to take the trade long. And the reason why I didn't take the trade long is for a few different reasons. Number one is because of that 4-hour, the trend time frame looks like it could be shifting down. Number two, and this is really the major bugger, if you will, that I have about this, is this basing that comes right before our level. That's not what you want to see. This, where we go drop, we want the drop to come straight into our level. We do not want to go drop and then base right above it and then come back in. And the reason why is because it really messes up your reward to risk ratio on the trade. Because there's a lot of selling pressure that comes in if we base and fall in. So if my target were to be right here, basically, is where it would have to be almost, because there's selling pressure that occurred at overnight. That would basically be a 1-to-1 reward to risk ratio in a level on level big zone. This is about $1,000 on the micros. So on the full-size contract, it's going to be a lot more. It's a decent zone, decent size zone. So basically, I don't know what that is. 8 points times 4 is 32 times 12.5 times however many contracts you have. That would be the risk. So it's a decent sized risk that we have here. And one of the things that we always have to think about, guys, is when we're trading, is you have to ask yourself the question, does this trade deserve my hard-earned money? Because that's what you're putting on the line, is your hard-earned money. And in this particular case, because of we're at 32 on the RSI, on the trading time frame, which is a 1-hour, we're below 40 on the trend time frame for the first time. On the 4-hour, we're at 38 right now. And because on the trading time frame, we have this basing that occurs right here, reducing our risk to reward availability on this trade, I chose not to take the trade. So a lot of times in trading, the smartest thing that you can do is not take a trade. And that's what I wanted to talk to you guys about on this teachable moment this morning. Was it's not even the best level to start. This is actually the area right here. This 1 hour. That's really the level. So as you come down into it, you do have some confusing things going on here, because as you look at price, you do have an equal low, I believe. The low of this, I'm looking up here at these numbers to find that. The low of that is 836.25, and the low of this is 836.25. So you have equal lows, but you have slightly positive divergence inside of the level, deep inside the level. So, however, that doesn't change the fact that the selling pressure originates from here. So price could go all the way up, and it could work out, and everything works out fine for those of you that took this trade. However, for me, And the way that I trade, I like to add and stack the odds in my favor. And I don't have a lot going for us in this trade. And so for those reasons, I'm going to pass on it. And just kind of wanted to go through that with you guys this morning on why sometimes not trading is the actual smart decision for us to make as traders. Even though I've had this level marked out since I think Tuesday of last week, or Tuesday earlier this week or something like that. So we've done that work. We waited for price to come in and it just didn't fit the mold. So guys, with that, take it easy. I hope you learned something on this teachable moment. Again, not trading is sometimes the best thing you can do as a trader. All right, guys, see ya.